Hello, my name is Juan K. Pierre, and today I wanted to share with you something, which is my trading journal, which I've been compiling over the years based on what I learned from uh, prop firms, from good traders, from really good traders, from books, from the internet all around. And I wanted to help out my fellow discretionary traders because everybody and their mom have mechanical setup, mechanical entry rules, and this and that. And since I'm not a pattern trader, um and I know a lot of people are like me, vibe traders. Uh, I just wanted to talk about what makes a good discretionary trader successful. And according to me, that is having a solid process and sticking to it. And even though it's gonna be harder in the beginning, you're gonna eventually by sticking with your process, the process will stick to you. So you will learn how to follow the process, follow your own rules, do something that you know that works, it's repeatable and it's traceable. You give yourself grace, but you also keep yourself accountable and you improve each and every day. So you will not notice maybe the changes happening initially, but you will definitely notice it over time, over 1 month, over 2 months, as these good habits compound. So the sooner you start, the easier it's gonna be for you. And so if you're a mechanical trader or a pattern trader, you can skip this video. It's fine. Don't worry about us. No, I'm kidding. I'm kidding. But if you are discretionary trader, this is for you. So I will share the link to my Notion in the video description. So let's scroll through it. Here there is clocks, there is quotations, there is news. This is not really necessary. It's just nice. It looks good. That's why I have it mostly. So let's get down to business. So we want to understand a couple things. We want to understand what is our edge. We want to understand what is our workflow that it's repeatable in our game plan. How are we going to size our bets? And what are the confluences we use to determine the sizing of the bet? And then I will walk you through the process of keeping a journal, of journaling your trades, of compiling your daily report card, and of course, doing the weekly analysis. So let's start. First of all, is um, Twitter thread from Tom Dante. And I like to read this before I start working because it's a good reminder for me of where my edge lies. So I will read it for you. You can skip it and read it for yourself, but it's I think really important that you, I don't know, maybe print it, keep it in front of your screen, read it every now and then, because you want to understand what is your actual edge. Your edge is not clicking button when you see a mechanical pattern. Your edge lies in the fact that you can see it on your hands when you can when you should sit on your hands. It lies in the fact that you follow your plan and execute trades that you plan and not trade that you didn't plan. It lies in the fact that you don't take emotions from the last trade into the next one, and you understand that the markets can remain illogical longer than you can remain solvent. It lies in the fact that you only focus on what's happening right now, not all the things you could have done. It lies in the fact that the trading day doesn't end with the last trade. It ends when you journal them all and learn your lesson. And that's why we have this notion. And it lies in the fact that you want to study your mistakes rather than bury your head in the sand. That you want to remember the things that you would easily want to forget because they're painful, because you lost money like a damn bus. So Now you want to forget it and don't think about it, but you want to make sure you remember what these things are so you don't repeat them, and so forth and so on. It lies in the fact that it's a job, not an entertainment. So treat it as a proper job. Understand this is your edge. And remember that you're just one step away from acting like a cunt, not one step away from being someone special. If you're not humble, the market will humble you. Uh, so you better be humble and don't let the market humble you. Alrighty, now that you know our edge, let's talk about our game plan. This is my personal workflow. It's a little bit redundant, but this is taken from the playbook from S&B Capital. So here's what I do. I review the overnight price action, I identify the key levels and zones, and why are they the most important technical levels and zones? I mark them on my chart, and this way I have my big picture with my technical levels that allow me to understand what is the technical profile. So, is the market trending up or down? What is the market most concerned about presently? What is moving the market? What do I see in the market right now? Then on top of that, we will look at our intraday fundamentals. So, what major events will impact volatility today? Uh, do we have news, earnings, or anything? Am I trading the right instrument at the right time with the right volatility, the right volumes? I want to make sure that all of these things are under control and I know them before I start clicking buttons. So, your job as a trader is not to click buttons, it's to click the least possible amount of buttons. Your job as a trader is just to be smart. So once we have all of this, we start building our narrative through our intuition and we start our decision making process. So, based on our information, based on the key levels, based on past experiences, pattern recognition, market psychology, we start to identify possible price movements that we can anticipate. And if there is nothing, we will wait for the market to generate more information that we can use as confluences to refine our decisions. Once we have an idea of our narrative and of our possible trades, we start writing down the if then statements. If then statements are very powerful because they force you to follow a plan. And, sometimes, and today I'm guilty of this, you write some really good if then statements and then you don't follow them. Don't be like me, be better. Because you don't get smarter in a trade like 99 out of 100 times. So just trust your plan and trade your plan. Don't do things that are out of your trade plan. And don't do things that are out of your process because once your process is defined and it's proven and it's repeatable, it works. You just need to do like some decisions, but the heavy lifting will be done in the beginning. And I cannot stress it enough. You want to have everything ready and categorized so you can review it at the end of the day and at the end of the week. You can reevaluate the market conditions, past decisions, you can refine the executions and adapt. And of course, you will assess your execution, your risk management, your adherence to strategy for continuous improvements. And you will give yourself a grade every day and for every trade. And you will be able to decide to see what you're doing well and what you're not doing well, to see if you're gambling, if you're just clicking buttons just for the sake of it, or if you're actually taking meaningful trades. And this is something very important. You want to avoid taking trades that will lose you money because it will unfortunately uh, slow you down. It will slow you down even more than if you didn't take those trades. That's the thing that it's really hard for us as human beings to imagine and to understand. Doing more, it's not necessarily doing better. Doing more might be doing worse. So let's go. Here's our weekly review that you want to do at the end of every week. You want to find the best and the worst things you did on every day, and you want to see what market conditions were there, why did you trade well, why you didn't, and then you want to write down the lesson that you learned. And this is also from Tom Dante, the weekly performance review. You want to start asking yourself all of these questions. What worked, what didn't, why the things that worked did work, why the things that didn't work didn't work, what errors did I do, why. And so find yourself what problems are recurring and ask yourself, why do you have the problem? What is the solution and how to action it? While for things that work, ask yourself how you can do more of what worked and add to that. On top of that, I want to make sure that you're able uh, to study the biggest move of the week across the markets you trade and start reviewing if in your normal trading anything would have caused you to catch that move, because this retrospective work, it's great to develop perspective. So we do it also at the end of the day in our daily report card. Here's our trade template overview, which is the same as the workflow you've seen before. Anyways, we have our easiest money. What was the easiest trade? Whether you cut it or not, you want to be aware, you want to re-engineer the session that you've been trading, and you want to know if you are able to, and you want to know if you're able to spot the big moves, the best moves, the easy moves, and if you aren't, you want to get used to it. You want to be able to re-engineer because the market rhymes with itself. You will never have an exactly same, two same days, but you will have similarities and you want to be able to spot them as fast as possible. So our daily report card, we write down our trades, if those are basics or longer trades, trades to hold. We write down the setup names and we grade ourselves based on our trades. So we have our reminders here. You can change them as you wish. We have our intraday performance tracker. Uh, PTD stays for play of the day. Then, what did I learn? What did I improve upon today? You want to write it down, and you want to write down also the changes that you needed to make from today. So, your errors and that you are aware of. Then, if you're not using OBS to record your trades, I suggest you start because it's very important actually to do that. And it allows you to find your best trades and to see them again and to spot them again. So this is all in order to develop this perspective starting from our retrospective. So this perspective will allow you to be confident when you find the trade and to be able to click. So each discretional trader has its own method of finding trades. uh, Me personally, I use confluences. I will show you first of all our new trade uh, page, which we're supposed to fill before every new trade. So trade type, trade to hold, basic, setup type of the trade, and the grade at the end of the day. So once one thing I suggest is that you grade all your is that you archive all your A and A plus, your best trades in a playbook. So you can revisit them and know what you're really good at. So at the end of the week, look for the A trades and look for the A days and you know give special attention to those because those are your best performers. You want to do more of those and less of the things that don't work. So as I told you before, here we are just repeating what we have in our workflow, but I want to have it written down because it helps solidify the process. So, what are the most important technical levels? How far is the market from the important technical levels? Is the market trending up or down? What is the market most concerned about presently? What is moving the market? What are the intraday fundamentals, the news, major events that will impact volatility? What is our technical analysis that we can put in here before and after the trade? What is our intuition? What is our idea? What are our if else statements? So, for example, if it is this level, I stop trading, or if it breaks below the opening range and I'm long, I will close the trade, or uh, if it breaks above the opening range and puts a new high, I will add to the trade, and this and that. So, you want to make sure you write them down before you start trading. Alrighty, then I want you to write down the reasoning behind your trade here. And of course, after the trade is done, given the information available at the time, was it the current decision from an expected value perspective? This is what you have to ask yourself after every trade. Because the thing is, with the information available, did you take the best trade or not? That's what matters. If you did, it was a good trade. If you didn't, it wasn't. That's all. And then I want you to track down your mistakes. Today, my mistakes were improper sizing, improper targeting, taking trades I shouldn't. So I started well. I went in profit in one account, and then that got to my head, and I started over trading a little bit on another account, and that causes me to transform a winning day into a losing day. And now I am very mindful about this. I know this is stupid, and I know that I shouldn't repeat this error. Sometimes it happens. So everybody takes trade out of the plan, and when you're a discretionary trader, it happens. We use this journal to slow ourselves down, focus on only taking the best trades. There are possibly a lot of good trades during the day, but very good trades, maybe one, maybe two, maybe zero during the day. I don't know, but the very good trades are the one that are easy for you and that gives you good value. So um, you want to focus on those, and you want to know how to make more of these, and you want to know how to avoid the errors that are slowing you down. In order to do that, you need to be aware of those. You need to be really sincere with yourself, and you need to understand that my mistakes might be impatient, so I will work on being patient, not chasing trade and waiting on for the right levels. Even if sometimes it work out for me, I know it's not right to chase price. Your error might be closing too early because you're afraid to lose money or hesitating. I don't know, but you need to know what you're not doing well in order to focus on that. Okay, so as I was saying, my trading is based on confluences. These are confluences, and they're not the same for every setup, but these are the confluences I use. You will use your own. I don't know if you're an ICT trader, if you're a trendline trader, if you're an order flow trader. Everyone has their own way of reading the market. Me, these are the confluences I use, and I'm trying to optimize this in order to make sure that only the most relevant ones are used by myself. And I suggest you do the same. So, as you can see, you know your edge, you know your workflow, you know how to structure your playbook. You write down trades, you write down your daily report cards, you read your daily report cards weekly, and you assess your errors, and you make a plan on what to improve, on what needs to be improved, and what you need to do more of, what you need to do less of. And then you look at your good trades and you grade them and you archive the best ones. So you start building a playbook of repeatable good setups. Okay, this is very important. So I've talked about the confluences. So the more confluences I have, the more I'm sure about my trade, the more I can uh, confidently add size. And in terms of size, let's talk about bet sizing. So let's assume that trading is like playing poker. Would you put the same money if the hand they served you was pre-flop a two and a four? Then you will put in a couple of aces? I don't think so. A two and a four pre-flop, you will likely fold, not even play the hand, given the chance. And that's your bet trace, the one you want to avoid. Then that doesn't mean you cannot win with a two and a four, but it means that you should risk accordingly, as you will do for a poker hand. Same thing. If you have couple of aces, so same thing. If you had a couple of aces, would you be using the same size? No, of course you wouldn't. You will size properly. You will bet more because this is a good trade and you're aware of it. And this is exactly what bet sizing it's all about. You want to know first if you're trading a base hit or a trade to hold. Second of all, you want to know if your bet size is aligning with your conviction, with the probability of trade success, and in general with your risk management strategy. You know, you want to make sure that these things are all in alignment. And on top of that, can you defend these bet sides? Can you keep betting? Would you do this same bet again over and over? Is it mm, good bet in terms of expected value, or is it a bad bet in terms of expected value? So all of these things are what should determine your bet sizing as um, discretionary trader. Okay, so let's just read everything from the beginning and then I will share the notion in the description. You can follow me on Twitter at 1kpierre, uh, or you can follow me here on YouTube. I will try posting more videos. Uh, but so as a discretionary trader, your edge lies in your psychology and your risk management and your ability to follow your trade plan. So it is good for you to have a strong process that is repeatable and that is proven. So you want to have a game plan. My game plan is based on a workflow that allows me, starting from the technicals and the fundamentals, to build a narrative based on what I know and my intuition. Okay. And this workflow, it's repeatable, so you will be able to review it, and the review process will make you aware of what you do well and what you don't do well, and will let you improve. You cannot improve if you don't know what you're doing. That said, you want to understand how to size properly in a bet, as if this was a poker hand, and you want to be able to spot your confluences and use them in your trading to decide when to take a trade, how to size in the trade, and how to manage the trade. Okay. And in order to do that, we use this trade archive with a playbook where we basically have this little page for every new trade, which is just our workflow plus something like mistakes and something like intuition. So where you can just write down everything as in our workflow and review it. Same thing with our daily report card, and same thing with our weekly review. So Sticking to this kind of process is what makes the difference between a successful trader and a failing trader. You want to make sure you're not clicking mindlessly. You want to make sure you spend enough time writing down this stuff and less time looking at candlesticks forming, because that by itself won't help you after a certain point. You want to make sure you have a strong process in place, and you want to make sure that your strong process is repeatable and that allows you to improve from who you were yesterday. And you want to make sure this happens every day, because as the market changes, your edge will not stay the same. So that's it. That's it. Thank you for listening. I hope you find this useful. And you can find the link to this notion in the video's description. This is totally free. You can follow me here and on Twitter. I appreciate you. Trade well, and I love you.